morning. We're taking a look at gold, and you can see this is the weekly chart and what gold has been doing. Now, the important thing to know is this. When we broke up out of that pattern there, it's that little bullish flag, when we broke up and we hit that 1452 area, we slammed back lower, but look, we didn't break this trend line. That was the low. Our low there, 1400. Our trend line, 1400. Okay. So it did that and the 9-week moving average. So it's been fairly buoyant. It didn't break below 1400, which was a good idea. So we were already long of gold, and I bought some more when it went lower. I got them in at 1408. Now we're at 1452 again now as we speak, after making an overnight high of 1455. So what is this telling us? And nothing new from what I've been saying about gold for the last few weeks. We have made a break to the top side here. This may well, could be, a double top. Let's see what we do. Let's see when, the market wakes up, bless it, which it's not at the moment. Will it continue? Where can we go on the top side? So what I'll do is I'll take you through the monthly chart as well. At this point, okay, of May this year, at this point, when we've gone up, the measured target off of this pattern is 1603. Now, obviously that's a way away in the foreseeable. There's two ways of measuring to get short-term objectives. You measure that pole and you add the number of points onto the break point, and that gives you the measured target. What I do also is I measure the height of the flag, of the pennant, of the triangle. This happens to be a pennant. I measure this. That was a total of 58 bucks. So when I add 58 bucks to the break point, that gives me a short-term target of 1493. Now, I don't know if you can see over here that I've got a 50% fib at 1473. Let me see if I can show you why. So what I'm actually doing is taking it from the highs to our recent lows, and I'm projecting the fibs of that move there from 2011 to 2015, and that gives me 1473 as a 50% fib level. Ignore that one, that's just me doing workings out. So that 1473 to 1495 is going to be quite important. Now, you hear people scrambling on about gold was in a bear run. It wasn't. Gold is in a naturally bullish run, going back years. Okay, I don't mean prehistoric, but gold's come from 230 to 1900. So the bit we saw between 2011 and 2015 really was just a correction to the overall bullish trend of gold. So I don't see any reason at the moment to liquidate any longs. I'm going to still put them in a drawer and run them. I may take some profit at 73 and 94, 93, 94. That's my measured target. I still think gold can go to 1603. That would be that measure target of the whole of that pole that I talked to you about. I can't see anything in any chart that is telling me gold is going to go lower. You're obviously going to get pullbacks. There's the daily chart of what gold did when it went up and come down and went up again. So yeah, we could be seeing a double top on gold, but the drawdown should only now be to here, or possibly here. So your downside risk, I think, is 26 to 1424. I don't see it going down any further. The ROC is pointing higher. The RSI is doing really not a lot, but neutral. And our stochastics are 64%, so they're not really going anywhere. They're pointing higher. And when you get any conflict in the world, automatically gold becomes a currency, which is what I have said to you all along. Don't look at dollar weakness or dollar strength as an indicator to gold. The dollar's been strong, but so has gold. Okay? Because it doesn't matter. Gold, they can both go up together. Sounds weird, but that's what they do. The gold and the dollar can both go higher together because of the supply and demand more for gold. Okay? Right, I think that's about, I've just bored you enough now on that with gold. Good luck. I'm off on Ollie Bubs. And I will be doing videos throughout the week and keeping my eye on things. But I won't be sitting here all day long. Okay. Good luck. I'll catch you tomorrow.